call on this one. Okay, then admit all. All right. So on the screen, you can see the ground rules. All participants will remain muted while the class is going on. Raise your hand if you need to ask a question or stop on clarification. Type in your question using the chat box, and also ensure to have a clear background before unmuting to speak. Please, let's just try to comply with these few rules. Today, first, we want to do a knowledge check. So I may have you guys unmute and speak to me, okay, before we go into the main presentation for the day. All right, so I have two major presentations and also a little bit of how we can navigate our trading platform. All right. So for the trading platform, I will quickly open MetaTrader 4, MetaTrader 5. Okay. Then I can open, let me see, IQ option, it's IQ option trader. And then I'll open the trading view. Let me see you, trading view. Trading view. Trading. See. IQ option. Yeah, I'll install that trading view. Okay, so we can look at it on the web. Sorry. Take it on the web. By the trading view. Okay. All right. So let's go. Knowledge check. Now I will just take one page. Okay, and I'll go with the standard candlestick. Standard candlestick. Then for the standard candlestick. Standard candlestick. Okay, so what you see on my screen, is the MetaTrader 4. Okay, this is the MetaTrader 5. I can just go and put the basic candlesticks. 1 minute. Let me take out all this my template so that you don't get confused. Okay. So this is MetaTrader 5. Okay. Then this is MetaTrader 4. Okay. And then if you come here, this is the IQ option trader. IQ option trader. Okay. I'm just going to show you how all this works. And then lastly, we have the trading view. So I'm just going to take it from the web. I'll just take us to, please, one minute. Let me caution this. Okay, so let's just pull out any chart, products, Forex trainer. Let's take Forex. Okay. And let's take a particular pair, say Euro USD. All right. Then we'll take you to the charts and change it to candlestick. All right. So there's a Euro USD charts. So go to super charts. All right. So this is your Euro USD. This is your trading view. Okay. Okay. So I've opened 4 different platforms that you can use to trade. Okay. And I want you to understand TradingView is a company that provides trading education, trading tools, for traders globally, and it is free. Okay. But then they also have the premium version. Okay. Apart from the free, there's also a premium side of it where you can have access to some specialized tools for market analysis. Okay, that's TradingView. Then this is IQ option. IQ option is a broker. Okay, and they don't use MetaTrader 4. They decided to use their own trading platform. This is their trading platform. Okay, and this trading platform has everything you need to trade the market. All right. Then we'll come to the popular MetaTrader 4 and MetaTrader 5. This is the most popular trading platform in the world, and it's 100% free. Okay. You can do your analysis, you can do everything you want to do. You can log in different brokers on this platform. So this platform is available to everybody for free, and here is their website. Their website is MQL5. Okay, so I'll just open my own access, okay, in their website. So this is my access in their website. And when you have an access in the website, you can purchase things. Okay, most especially indicators and expert advisors. You can purchase them here, but you can see what the market is all about in terms of what they are doing in terms of indicators and expert advisors. So if you come here, click on market, it will show you the available tools on MetaTrader 4 and MetaTrader 5. So on the top is MetaTrader 5, while on the bottom is MetaTrader 4. And if you scroll down all the way to the bottom of the page, you can see where you can download each of these platforms. So this is MetaTrader 5. And also, let me see, I have MetaTrader 4 here. Okay, so I don't think I have MetaTrader 4 here. Okay, then all this company, they provide the platform to different brokers. Okay, every broker in this world have this platform. So what you do as a trader, once you have created your account, okay, the first step is to create your account. Just like you will go to the bank and say you want to create a first bank account. You go there and you take the forms, you fill it, you create the account. Once you have created the account, inside the account now, you will see a place where you will download the trading platform. When you download the trading platform, it's going to come out, like this. Usually it will come with about 4 pages like this, okay? When you finish downloading it. Then you can now start setting it, configuring it to what you want. or the way you think is more comfortable for you to use it. So you can do all that by yourself. But then basically the most important thing is that you want to know how to use this platform. So how do we use this platform to trade? So this platform gives you the opportunity to open and place your trade, monitor your trade, close your trade, and also see history of your trade and see how well you have performed over time. So those are features of this platform. So for today, like I said, this is like the banker or the farmer that has a pen and a hoe. So the farmer need cutlass to go to farm. Yeah, the banker need pen to go to work. So these two people, they have to know how to use these two things very well. The farmer need to know how to use the hoe. You need to know how to till the ground. You need to know how to plow the ground. You need to know when to, to sow and when to harvest. The same thing with the banker. You need to know how to use the pen. So as a trader, you need to know how to use MetaTrader 4 and MetaTrader 5. It is basic. You cannot run away from it. If you don't know it, you cannot trade. Okay. Now, even though we have the desktop version, we also have the mobile version. Okay. The mobile version is not as fully loaded like the desktop version. So with the desktop version, you can do a lot. So yeah, these are tools. Everything you see here is just like your normal Microsoft Word. If you come to File, you come to View, you come to Insert, all these tabs, there are things you can do with all these tabs. So first, if you have created the account and you have your account running, you can come to this tab. You see this place that says View, what you want to see. If I decide to uncheck this status bar, the status bar will go away. If I decide to uncheck the chat bar will go away. Then the market watch, the navigator, the data window, and the terminal, these are the three most used in the MetaTrader 4: market watch, navigator, and terminal. Terminal is where you see your money. Okay. This is where you see your trade. When you place a trade, it shows you like a journal. This is where all the trade will appear. Okay. What you are seeing here is balance. The next is equity, and the next is margin, and then you have free margin, and then you have margin level. Now, critical among this component is 1, 2, and 3. That is the balance, the equity, and the margin. Now, this your balance is the money you have in your account. Okay. So I need to clarify this because a lot of persons normally ask questions about when they want to trade. They say, oh, how much do you need to stake? Because a lot of people believe or think that Forex is a game. They always view it from that aspect of staking, winning and losing. No, it's not like that. Forex is a business, okay? And this business is time bound, okay? This business is time bound. Time bound in the sense that I can take a trade. And decide to leave that trade from 1st of January to 30th of January. In as much as that trade is going in my direction, I can leave it for that long. And when companies are paying salary by 30th of January, I come here and I close my trade and I take my profit. So you can take your salary every month from trading. So I wanted to look at it that way. It's not just coming to the market on a Monday, placing a trade and losing a trade and going away and say, oh, you have lost, you don't know how to trade. No. You need to look at trading from a holistic perspective, that this is like every other job that you do. Okay, it takes time. It's not gambling, and it's not a quick way of making money. You just come the next day, you make money. Yes, you can make money quickly in Forex, but you have to know it first. You don't just have to believe that you can make money and then all of a sudden you jump into the market and you are losing money. Okay, so you need to know how every of this work. So the balance is what you have in your account. The equity is what you have in your account plus what you are making, whether profit or loss. So my balance here is 1,386,195.03. This value that you are seeing as equity, it can either go up or go down. It can go below the balance. It can go higher than the balance. Okay. Now, why is it showing me 1,377? Because I'm on several trades here, and this trade, they are giving me a loss of minus 9,000 naira. So if you subtract 9,000 from 1,386,000, you will see that you have 1,377,119.07. So this is your equity. Your equity is always seen as floating until you close the trade. That money is not yours. Okay. And for your information, this trade, if you remember last week on Friday, I shared you a screen. I'll just quickly go to that screen. And I said, current running trade, right? Yeah, current running trade. If you remember, many of us are in the WhatsApp group. If you're in the WhatsApp group, you saw this trade. Can you see that this trade has already given me 48,000 naira, but I did not close it. And now this trade has come back to a loss of minus 9,000 naira presently. Okay, so this is the chart. I can just put the chart there. That's the chart of the trade. So I expect that when the market opens tonight, this market will go up. And I'm very, very convinced that it will go up. I am very, very sure that it will go up. Do you understand? Now, also to clarify you, you can see that where the market is right now is a previous resistance that is now becoming a support. This is a resistance level, right? This is a resistance level. And now this resistance level can now be seen as a support. Okay. So now when the market pulls out, you see this candlestick, this is a bullish engulfing candlestick. And the market pulls out with a bullish engulfing candlestick, right? And if I put my Fibonacci there, you will see it's coming from one of the Fibonacci levels right here. You see it's coming from the 68, 168, 68, 61.8 level. And if this market is going to buy, it's going to come minimum 161.8 level. This is where the market is going to run to, at least before it will do a pullback. Okay. Now, I'm able to tell you this because I know if somebody that is looking at the chart will not be able to say, oh, this market is going to go up or go down. But there are tools, there are analysis that makes me know that the market is going to go up or it's going to go down. So first, if I put a trend line here from this low to this low, right? You see the market here, 2, 3, 4. This is 4. This is the fifth touch. And the more the touches on the trend line, the stronger the signal the market is giving to you. Okay, so the first time the market created this, it came back, it hit it here, it went up, came back and hit it here, it came back again, hit it here, and now it's hitting it again at this point. So there's a chance that the market is going to go up. Okay, so I'm not closing my trade, I'm not running away. Even though the market has gone all the way, the market went all the way to 48,000 naira profit, I didn't close it. Why? Because I believe the market will still go more. Now, in the process of the market going more, the market has actually come down, and I'm not negative, right? I'm not negative, okay? But I'm not bothered, okay? Because I have my analysis intact. Now, what the market is going to do next, the market is first going to come with a lot of momentum to break this high, break this level, and possibly test it, and then it shoots up the way to 161.8. So that's my analysis, right? But then you cannot do this analysis if you don't know how these tools they work. If you don't know how these tools here, you see this up here, if you don't know how they work, you cannot do this analysis. If I put my mouse on anywhere here and I right click, it gives me a menu where I can come down and say customize. If I click on this customize, I can see all the tools that are there. All these tools that are here that are showing, if I decide to move them to this side, to the back, they will disappear from here. And if I want them here, I select it and I say insert, and it comes here. Anyone that is showing here is the one that you can see. So I can see navigator, I can see market watch, I can see template. This is template. I can see template. Okay. So if on your own you have designed a strategy, a trading strategy, what you normally will do is to make it a template. so that you don't have to do it every time. Because for me to design a strategy, let's just do something on moving average, for instance. So this is a template. This is my plain template, nothing on it. Now, I want to do a strategy on moving average. I say, okay, I want to do riding the trend strategy. Riding the trend, I need 2 moving averages to do riding the trend. So I come here, pick moving average, insert it. It's either you drag it and drop it on the chart, or you just double click on it like this. Whichever one you do is going to bring it. So I want to do riding the trend. So I put moving average. I change 14 to 20. Okay. And I can change the color. Let's say I want the color to be black. I say black. And I say I want the thickness to be this. Okay. And I said, okay. It will show you a black moving average, right? Then if the second moving average is moving average 10. So I come here and I say riding the trend. The second moving average is moving average 10. I change this to 10. And I say, let the color be red. Okay, I select red. And I say, okay. Now you see 2 colors, 2 lines on the chart with 2 colors, right? Now, what this theory state is that if the market is trending, the candlestick will be either above or below the lines. So now in this case, the candlestick at this point break above the line and stayed above the line. Okay, at this point, break below the line and stayed below the line. Break above, stayed above, break below, stayed below. So this is what the market does continuously. But this is the theory of the riding the trend. Even if the market comes back, let me look for a good place to show you to. Yeah, just go back in history. Let's look for a long trend. Okay, so this is a long trend. From year to year is a long trend. Now the market is riding the trend. Riding the trend is when the moving average 10 crosses over the moving average 20. So moving average 10 has crossed over moving average 20 here. So meaning that all my thought is this market is not going to buy. Now, I want you to see this place. Even though the candlestick came below the black, but the red line did not go below the black. For the singular fact that red line has not gone below the black, this market is still an uptrend. It's still an uptrend. This is the main takeaway from riding the trend strategy. Okay, so now this strategy, I will now come here and say, save it as a template. So I come here, I click on save, and I say, give it a name. Let's call it riding the trend. Okay, and you say save. Okay, once you do that, you come here and you click save. Now this strategy has been saved. Even if I remove this chart and I need this riding the trend, all I need to do is just come to template, click on template, and scroll down until I see riding the trend. Okay, so if because I have a lot of templates here already, so the whole of this place cannot take it. So what you can do, you can come to the template and click on load. When you click on load, then you can scroll all the way down, everything. So now I'll now scroll to riding the trend. So you can see riding the trend there. This riding the trend. Once I click on it and I say open, it will give me that template. Can you see that? It will give me that template automatically. So this is the template to work. Okay, in the MetaTrader 4, and it's the same for MetaTrader 5. Okay, no difference between that of MetaTrader 4 and MetaTrader 5. So it's very important that we understand this. And now I want you to understand that this chart that you are seeing now is 1 hour. That is, the time frame is 1 hour. If I change this time frame to 4 hours, that are you seeing that in 1 hour you can see that the market is below the line, but in 4 hour on 4 hour you see that the market is above the line. Then on daily you see the market is below the line. On weekly the market is just breaking the line. On monthly the market is above the line. You see that? Then you can come all the way to 30 minutes, 15 minutes, 5 minutes. It all depends on any chart of your choice. You can use any of this chart to trade. Okay. So this is how the template work. Then these are lines. So these are one of the two most used tools in this MetaTrader 4 is the line tool, which is the horizontal line, vertical line, and the trend line. These are the three most used tools because most of the analysis that we do them with lines. Because if I want to locate this level, I'll come and put a line. Any of the level you want to locate, you use lines. You understand? Then if you want to draw the trend line, you draw the trend line. So before we finish this class today, I have a model for you for trend line alone. Okay. After today, you should be able to understand trend line and be able to apply it, to analyze the market. So that when you see people drawing trend lines everywhere in Facebook, on TikTok, you will not be surprised. Okay, because most time a lot of people see them as imaginary. What is this? What's this guy talking about? Okay, but I'm going to clarify all that for you today. Capish? Then another tool that we use mainly is the Fibonacci tool. The Fibonacci tool. Our main class for today is actually the Fibonacci tool. That's our main class for today. Okay, so after now we're going to delve into that. And then these are candlestick. You can when you highlight this, it shows you the candle. If you select line, it shows you the line. Or if you select bar, it will show you the bar. So depending on which one you want to use, but the most popular of them all is candlestick because this is the new generation tool to trade the forex market. All right. Then your navigator, what the navigator does is that it breaks your navigator gives you like three parts. The first part is your trading account. The second part is your indicators. The third part is your expert advisor, and the last part is your scripts. Okay. Now you don't need to bother yourself about scripts. Okay, these are automatically populated. You don't need to do anything there. But indicators, you can get indicators from external source and also from internal source and update. So when you install the MetaTrader 4, automatically this set of indicators will come with it by default. This trend line, you see this trend, oscillators, volume, B. Williams, market. So everything here will come with it by default. But inside this market, it's only the things that you install from here. Remember, I told you about MQL4. It's only the things you install from here that will go to that market. So this is, if I say indicator, yes, now this is MT5. So let me go to MT5. If I say indicator, MT4 indicator. If I buy any indicator here, this you can see the prices. Imagine this indicator is $165. This is $400. $199. There are a lot. You have indicator of $50,000 in this place. Okay. If trading business is not good, somebody will open his eye and invest $50,000 in 1-2. Trust me. Look at this one. This is $1,399. One indicator. Okay. This is $550. So if these things are not working, people will not buy them. People will not buy them. So think about it. And this is just page 1 of 162 pages. Everything you see here are indicators, and I can filter it by coming to say, I want to see only paid. So it shows me only indicators that are paid, that I have to buy with money. Okay. If I say I want to see only free, I come here, I click on free. It shows me only the ones that are free. You don't need money to buy these ones. Now, because that they are free doesn't mean that they are not working. So don't get it twisted. That they are free doesn't mean they are not working. In fact, most times, if you know how to use the free one very well, you don't need the paid one. The only reason why most time I buy is because sometimes there are features they put on the paid one that they don't put on the free one. I mean the programmers. Okay. If you are a programmer, if you already have knowledge of programming and you can program and you can do something like this, then you are at an advantage, trading in the forex market. Because apart from understanding trade, you can actually create your own indicator as well. Then I can select new, that is the ones that are just being populated, new ones that just came into the market. And then the last option is popular, that is the most used, the one that people have downloaded the most. You see them, they are all here. So if they are not working, people will not be downloaded. This is my account. And if you go to this my account, if I click on my name here, right, and you come to my purchases, you can see I've made 54 purchases from this website alone. Now, and so don't also get it twisted. This is not the only source where we buy indicators from. We buy indicators from numerous sources, right? So this one, on this source alone, if I click on this purchase, I have purchased 54 indicators, and the total amount I spent on this site is $2,345. Okay, on indicators only, right? So if you want to succeed in trading, you need to go the extra mile. Most especially if you know that you need this indicator and it will help you. Let me give you an example. Example is this guy, True TL. So I have an indicator that is called True TL. Okay. So that indicator, I set it here as a template, and this is the indicator. So if I apply this indicator on my chart, automatically it will draw for me all the trend line that I need. I don't need to break my head drawing the trend line. The indicator will produce the trend line for me. Okay. And now you can see where the market breaks the trend line. You can see where the market respects the trend line. You can see where the market have what we call three touches. You know, one of the book I shared with you that talks about, that was written by, is it Felipe something. Okay. I talked about that book a little bit the last time. Where is it? Yes. This one. This one. This book. I told you I bought this book from Amazon. Okay, I bought the hard copy. Apart from the soft copy, I also bought the hard copy that was shipped to me. In fact, I bought two because there was a friend of mine that was also interested in it, and I gave it. It said the secret code of the Japanese candlestick. This is that book that talks about the 5 Sakata methods that we were discussing the other day. I talked about the great circle. Okay, and in this book, I said the writer of this book made mention of something about three, right? The number three. He said the number three is very important in trading. And once you hear that word, that number three, when you come to your trading application, what it does is look at what it means by that number three is this. So this is the highest point of this market at this point. And then when the market came here, when you drew this trend line, when the market came here for the third time, can you see here? When the market came here for the third time, this is the third time the market is touched. This is the first, this is the second, and this is the third. 1, 2, 3, sell. That's what it's telling you. 1, 2, 3, sell. In the same vein, you have here 1, 2, 3, buy. Look at it. 1, 2, 3, buy. So three is more like telling us this thing is holding. Yes, of a truth, it is confirmed. You can go ahead and take this trade at this point. Okay. So now, just to emphasize more of the importance of the paid indicator, is if I want to draw this trend line by myself, I'm going to do something like this. I'm going to pick this line. Okay, pick this point, the highest point, move it until it touches this. Okay, pick the next one from the last place where it touches, move it until it touches this. Okay, then pick the next one and then move it until it touches this. You know, so you see how the market respects it. This is the trend line. Everything that I'm drawing now, I can draw from top, I can draw from bottom. This is the lowest point now. I'm going to come like this. This is the first touch, and then I come and draw the second touch right here. Okay, so I have 1, 2, 3 buy, 1, 2, 3 sell, 1, 2, 3, 4 sell. Okay, so every three touch, both horizontal, like for instance, this is a support, right? The market hit here, it came here, it bounced, it came here, it break, it came back here, it held, sell the market. Okay, three touch. This gave here 1, 2, 3, buy the market. So this is what your horizontal and dynamic resistance and support does for you. Okay, so this one is horizontal resistance support, while the slant one, they are called dynamic resistance and support. Okay, so it is resistance when it's coming from the up, and it's a support when it's coming from the bottom. In the same vein, for the horizontal, this one that is coming from the up is a resistance, and this one that is coming from the bottom is a support. Capish? Can you give me a confirmation if you are following me and you're understanding what I'm saying? Is it clear to everybody? Just unmute, say yes or no. You need clarification, you need us to backtrack and do that.
Yes, it's clear.
Perfect. Okay. So basically, the most important thing is to know now. I cannot take right MetaTrader 4. I don't normally do it as a class. Okay, I don't normally do it at this one that I'm explaining to you. I normally don't do it because what I do, everybody I've ever taught, I'll tell the person, go to YouTube, look for trading videos on how to use MetaTrader 4 and MetaTrader 5. Trust me, you will see a lot of videos that will explain this thing to you, because if we want to go into teaching on MetaTrader 4, we will not finish. There are so many things, inside it. And as you are using it, with time, you get better at it. And when you develop a strategy, you can also do something. You can also carry what we call strategy test. Okay, there's what we call strategy tester. Okay, with strategy tester, you can test your strategy to know whether your strategy is good, or you can determine how many percent or win ratio your strategy is. You can do that. When you do that, you cannot confidently say, okay, I have something that works, right? After you have done that, you can confidently eat your shares and say, okay, I have something that is working. Okay, so you can test your strategy with this guy. Okay, you come here, load all the information you want to load, and then you can change the time frame here, and then you can execute this strategy tester, and you can decide to make it faster or slower depending on what you want. This is the one that comes by default with MetaTrader 4. There are several strategy testers out there that you can install, like in form of indicator, and you can use that to test your strategy, if your strategy is working or not. Then one most popular tool is the market watch. The market watch shows you every asset you can trade in MetaTrader 4. It shows you a list of all the assets. So in MetaTrader 4, if I right click on this, you are going to see hide or show or symbol, set, spread, high, low, blah, blah, blah. Anyone you tick here will show. Like for instance, this time you are seeing here is telling you the time that this pair actually opened. This is the opening time of this currency pair. Now you will see that all of them are not the same. They don't all have the same opening and closing time. Yes, a sizable number will be the same because they are currencies. But then when you go to stock, when you go to crypto, you see that they are having different times. Equities, they're having different times. So sometimes you see that the market is working and you try to place a trade and it's telling you that the market is closed. Okay, why? The market can be on. Other things can be trading, while some are closed. Okay, and when the market is opening, it's also open in that order. Maybe it's not the same time that Euro USD open that gold will open. So Euro USD open and you can be trading, but gold is not open. Okay, and also I want you to also know that this time it's not the same for this broker. This broker is derived. If I come to derive market watch and I select time, if I come here and I say column select time, there's time, and I click time, you see, are you seeing the difference? It's not the same. Every broker does not open the market at the same time. All the brokers, they don't open the market at the same time. So depending on the broker you are using, I may be using a particular trader, a broker. You are using a different broker. Okay. Now, when my broker is open, your broker may not have been open. So I can be trading GBP USD, but you cannot be trading, but because your broker is not open, your platform is not open. So there are different times. So don't get it confused. When you see somebody trading and maybe you're not able to trade, check, are you using the same broker? If you are using the same broker, then the same condition will apply. But if you're not using the same broker, the same condition will not apply. Okay. So I can switch brokers here. So right here, I have several brokers in this place. So if I come here, and I told you before that this navigator, you can split. So I have accounts. I have Deriv, I have AvaTrade, I have Forex Time, I have SN. So if I open AvaTrade, for instance, if I double click on it and say open, now it's going to switch to AvaTrade. Now this is AvaTrade. You can see that this thing have changed. Now in this AvaTrade MT5, you have a lot of pairs to trade. So if I take off the navigator so that you see it in full, If I scroll this thing all the way to the bottom, you have 800 and something, about 817 pairs to trade from. These are assets. These are trading assets. So this is a combination of stock, equities, everything. And if you want to see the breakdown of all the assets that are here, you come here. Are you seeing this menu that says create a new chart? Pull this arrow down. It will give you the breakdown in Forex. These are what you have inside Forex: major, crosses, minors, tri, ZAR, Ruby, and ILS. Okay, in indices, this is what you have. In cryptos, this is what you have. In metas, this is what you have. So everything that you are seeing here is what is summarized in that small place I just showed you now. Okay, so you need to know how to navigate it. And like I said, for this is Ava trade. Now you can see the opening time. See the opening time is different from what you have in FSTM. So let's say FSTM. It's FSTM. Okay. So you see FSTM, you see that the times are different, right? So they don't open the same time. Then this is deriv. One thing I love about deriv is they offer deriv indices and as well as Forex, stock, and everything. So if you come here, you will see a breakdown: the boom and crash indices, the step indices, the volatility indices, range break, jump, there's drift, switch, and all that. Then you see Forex, the major pair, Forex, the minor pair, metas, cryptos, energies, equities, ETFs, stocks. So anything you want to trade, you see them. And now I also want you to also take note of this. If I let me hold it here, look at my screen on stocks. Can you see Australia 200, China 50, Europe 50, France 40? So on this my trade that you are seeing here now, this one that is presently giving me a loss, okay? This trade, are you seeing France 40? What I'm trading is France 40 and Euro 50. So if you go back to that MetaTrader 5, okay, and click on this place, this is what I am trading. The two things I'm trading right now is France 40 and Euro 50. These are the two things I'm trading. Now you can see Switzerland 20, Singapore 20, Netherlands, Japan, all these things. But now, if you come to FSTM, it is not interpreted, right? So many people don't know what FROA 40 means. They don't know. Many people don't know what EU 50 means. They don't know. What EU 50 means is like a combination of the entire European stock, the entire France stock. That's what it means. Okay. But it's not being broken down. If you come here, if you come to FSTM here, it's not being broken down. Okay. So let's see stocks. Indices. Yeah. So you see the indices, you see JP225, SG20, AU 200, that's the Australian 200, EU 50 is the Euro 50, HK Netherlands 25. So obviously they are there, but if you don't have the vast knowledge to know, you may have this platform, but you don't know what to trade, or you don't know what you are trading. Okay. So it's important you understand the platform you are using to trade. I think I want to stop here for the platform. Let's go to the model for today. Okay. Is that fine by everyone?
Yes, it's fine with me.
So I want to take you to another word, right? And that is the word of Fibonacci. Yes, many of you hear of Fibonacci. Uh, it's a very popular name, right? It's a very popular name in the Forex market. So, like I said, most of the material that I use to train, they are from Market Trader Institute, right? MTI. Almost everything is from MTI. Let me see what's happening to this thing. 1 minute. Okay, so let me do this. All right, so today we're going to look at the Fibonacci and how the ABCs are formed. So we have already talked about price swing in our previous, class. And we said a price swing is the movement of the market from A to B to C and then to D. While C to D is the extension. C to D is our area of interest where we want to trade. So today we're just going to jump into Fibonacci and how the ABCs are formed. All right. So let's go. So we've talked about this before. How the market starts from a low A, go to a high B, and then pull back to a low C and extend to a D. This complete one complete price swing. And when this is done, the market repeats the same price swing, making C A, making D B, waiting for the market to come back to a new C, and then it goes to another D. That is when we say the market is in an uptrend or a downtrend. So this is the down version of it. I'm sure you already understand this. All right, so today we're talking about Leonardo da Pisa, the Fibonacci. He discovered the Fibonacci numerical sequence and he worked for the royal families approximately 1170 AD. People call him genius, right, for his mathematical work. He said in 1202, he published a book that is called the Liber Abaci. The meaning in English is called the Book of Calculations. And this is the same guy that introduced the Roman numeral, the Romans that replaced the Roman numerals. So he's a genius. And most of the things he did, they are visible today after his death. Okay? Maybe even him that did it didn't know that these things are going to work this way after his death. But trust me, after his death, there's a lot of things that follows the sequence that he developed. All right. So I'll just skip this, right? So let's just come to the sequence. So Fibonacci developed a sequence and he said that this sequence is a universal numerical sequence. And this sequence is such that when you add the first number and the next number, okay, I don't know if you are getting me. When I add the first number and the next number, I should have more like so if I say 0, 1, 1, right? So once I start from here, my second number and the third number, I should have the next number, which is 2. Okay. Now, if I add the next number to the preceding number, I should have the next number, right? But now, these numbers, it may look like, oh, it's just normal A, B, C, D, blah, and 1, 2, 3, right? But it's not. It's not. If you look at the first, look at the first number here, 0. The second number is 1. The third number is 1. It's not 2. Okay. So now, if he did this, when he did this, he observed a relationship within this number. So what's that relationship? The relationship is this. I think this was done after his death. This was not done when he was alive. Okay. He just created the numerical sequence. And of course, he died, just like we have Laplace. Okay. But then, mathematicians over time started working on this number and they now saw this relationship. And this relationship, we now discover that this relationship is visible in the real human life. Okay. And then somebody now said, if this thing is working, like this in real time, then why won't it work in the Forex market? Okay. If it's working, I mean, on object, why won't it work on the Forex market? So that was what brought about all this story. So basically, if you look at the numbers, we're going to do some work on the numbers. And this number, so first, this is the sequence. This is just the sequence. Okay, know the sequence first. From 0, 1, 1, 2, all the way down. Okay. So from here, we start adding. So if I add this to this, I'll get this. If I add this to this, I'll get this. If I add this. So that's the way the number progress. Okay, starting from the first one to infinity. All right. But then when we start looking at nature, we start noticing that there are natural things that just obey these numbers. Okay. These are natural, these are not drawing. Okay. These are pictures that we're taking. These are real. Okay. Somebody took these pictures and came up with this, assertion. The white calla lily grows with one petal. Now that one petal is in the Fibonacci sequence. The euphorbia grows with two petals. It's also in the Fibonacci sequence. The trillium grows with three petals. It's also in the Fibonacci sequence. The columbine grows with five petals. It's also, now, this will not make sense to you, but by the time you get to the next page, okay, where you see, look at this pineapple, that you know. So when pineapple is growing, it grows in spiral. And now a spiral with first 8 parallel rows. Now, it is possible, it is very, very possible that the next spiral can be 10 parallel rows, but it's not. It's 13. Why is it 13? It jumped from 8, skip 10, skip 9, skip 11, and went to 13. Why? And then the next one is 21. Why? There are plenty values in between 21 and 13. The pineapple did not take those courses. Instead, it went to 21. And if you come to Fibonacci sequence, you will see all this order in the Fibonacci sequence. Right? The same for this guy. This is just similar to the pineapple. They do exactly the same thing. But here, look at the passion fruit. Now, this passion fruit, it grows in stages. And now when it's splitting, I want you to look at this splitting. Just like I said for the first one. There are possibilities. In between 3 and 5, there are numbers. In between 5 and 55, there are numbers. But why would the flower grow like this? Why will it come 3, 5, 8, and then the next, boom, is 55? There are other numbers in between. It didn't take them. Right? And you see that it's tallying with the Fibonacci sequence. Remember, the guy just did this sequence and left. Okay? The same with this guy. Okay, we have a lot of things. Okay, let's look at this one. And this one is very, very obvious. So if you look at the stem of this plant, it starts with one stem, right? Now that one stem, when it wants to split, it's splitted into 2. When it's splitting again, it's splitted into 3. 1, 2, 3. And now the next split is 5. The next is 8. The next is 13. It's so on point. Now, so somebody now said, if this is possible in real life, then it should have some kind of effect in the Forex market. So the brainstorming started. So how can we bring this to the Forex market? So we can go on in terms of things. Rabbit, when they reproduce, this is the reproduction of order of rabbit. Rabbit goes like this same order, and then the human hand. Look at the human hand. Every human hand has 2 hands. Every human has 2 hands. And each of these hands have 5 fingers. And each 5 finger has 3 parts, which are separated by 2 knuckles. Is it not true? Is it not applicable to you? Is it not applicable to me? All of us have it. Why is it taking the exact numbers in this sequence? You'll get to understand that shortly. The piano, look at the piano. We all play the piano. We go to church. Right? So this color that you see here, they are not just for fun. Even though they are not for fun, it's amazing that the way they are arranged also tally with the Fibonacci sequence. This I'm telling you, they are buildings. They are natural mountains, that obeys this sequence. There's a book I shared with you, The 10 Essentials of Forex Trading. go into that book, go to the Fibonacci section. You will see pictures that were taken of, rivers, mountains that actually curve in the same order of the Fibonacci sequence. So if all these natural things are following the number, so let's see what we can do with this number. So somebody said, okay, since these numbers are so powerful, let's do something. Let's take, so we have the sequence like this, right? That runs all the way to infinity. And somebody now say, okay, so we have this to here. We can take any one, it doesn't matter. But first, we want to do this and this, and then we'll come back to this and this. So if you just pick any number in the sequence and say, let's use the previous one to divide the first one. So if I use this to divide this, I have 0.618. I use this to divide this, I have 0.618. If I use it to divide the next, I'll still get 0.618. So if I use this to divide 377, if I use it to divide 6110, I'll still get 0.618. So that is number one, okay? So there's a relationship that exists within the numbers. Then two, if we turn it around and do the opposite of what we have done, and so, okay, let's use this to divide this, we have 1.618. We use this to divide this, we have 1.618. So if we go around, go from higher to low, we have, that same relationship there. And then when I say, okay, let's do a jump. Instead of using this to divide this now, let's jump from this one. Let's use this one to divide this one instead of this. We have done this, it gave us 1.618. Now I want to do this to this, we have 2.618. And when you do that for all the number to infinity, you get the same thing. So somebody now said, okay, this is working for addition, division. Okay, so let's try square root. So when you take square root of the result of your division, when we took the square root of 0.618, we got 0.786, right? And we took the square root of 1.618, we got 1.27. Okay, so something is beautiful. All right, so now let's leave all the mathematics behind, right? I just showed you how powerful that mathematics is. And that is why these two, go and research about these two. This is the tool that every bank in this world used to trade the forex market, Fibonacci. Every bank in this world, quote me anywhere. First Bank, Standard Chartered, UBA, Barclays, but all of them, they use this tool to trade the forex market. And they even have a high power one. This one that we're using, this is what we have access to. This one is my mind. There's a high power one, okay, that is called Power Fib. That one takes and places, it plays the trade for you and closes the trade for you. You don't need to do anything. When the market gets to the level where it should trigger the trade, we trigger the trade. When it gets to where the market should close the trade, we close the trade for you. You just come out and see money in your account. So when you see people doing indicator and they're telling you this indicator is $50,000, it's not a joke. So this mathematics I just showed you, this is what is behind the scene. So this is what we have been discussing. When we say will the market move from point A to point B, A is low, B is high. A is low, B is high. When the market moves from low to high, we say the market has done 100% of its ability. Look at it, 0 to 100%. Now, when the market it's just like a human being. If you are working and you have exhausted 100% of your ability, it is a natural tendency that you will rest. Okay? Now, maybe your rest may include eating, may include sleeping, something else that will give you enough energy to continue with that job. Now, after you have rested, you want to continue, and most time you will do even more than what you have done before. Okay? So, what am I saying? In Forex, when the bulls are moving, they are pushing the market up, showing that there are more buyers than sellers in the market. There are more buyers than sellers, until it gets to the high. At the high, there are more sellers than buyers. Okay? So when it gets to the high, what will happen? The bulls will take a rest. They are tired. They have exhausted 100% of their ability. And now what is happening to them is they are going, some are sleeping, some are just resting, relaxing, and then the bears will take over the market for a short while. So the bears, which is now a case of more sellers than buyers, jump into the market and start pushing the market down. The market starts coming down, 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 down. And then when the market starts coming down, there are levels. Remember the calculation that we have done in the past. We talked about 61.8, 78.6. So all these figures that you are seeing, they came from those calculations that we have done, right? So now we are saying, if this is 100%, this market can come back to 23%, it can come back to 30%, it can come back to 50%, any percent, right? But yeah, we took the most important ones. There are other levels, but the most important is 1, 2, 3, 4, 5. That is 38.2% level, 50% level, 61.8% level, 78.6% level, and the 86% level. Now, this is the beauty of this thing. When the market, and I want you to pay attention here, so that when you see that somebody is telling you that he has analyzed the market and is placing his take profit at a particular point, you don't know the reason why the person is placing his take profit there. You don't know, because you're not seeing what the person has analyzed, right? But I'm showing you this is what they do. Even the big traders, the high and mighty in the market, this is what they do. They will come and allow the market to come to any of these levels. If the market comes to either 38.2 or 50 or 61.8, when the market wants to continue, it will move to 161.8. Red for red. Can you see that? Red for red. When it gets to any of this red, let's say when the market is coming back, it gets here, and all of a sudden, boom, it has a candlestick formation, maybe a morning star, maybe a hammer candle, maybe a bullish engulfing candle. Any candlestick formation will just show up at this level. When that candlestick formation show up, put your trade. That's where you are going to take your trade, and then your take profit will be 1.618 or 161.8 level, while your stop loss will be below the A. If this market does not take out the A, emphatically I'm saying it, if this market does not take out the A, the market has no choice than to go your way. These are the words of Joshua Martinez, the son of the man that developed these two. Joshua Martinez is the son of Jared Martinez. Jared Martinez is the CEO of Market Traders Institute. He's the one that developed this Fibonacci tool that we are using. He did a lot of research, spent a lot of money to bring out this tool, that you have today in MetaTrader 4, MetaTrader 5 that people are using. So if the market comes, so when the market is coming from B to C, it is called retracement. And retracement is a rest. Retracement is a slowdown. Now, when it gets to any of this level, something is going to happen. If the market is going to change direction here, the market must do a candlestick formation. One candlestick formation must show up. It's either a hammer, it's either a piercing line, or a bullish engulfing candle, or a morning star. One candle, one of the many candles, shooting star will show up in this level. If it shows up in this level, you take the trade, you put your stop loss below the A, and for some reason, it breaks down below this level. Don't close that trade, leave that trade. It will still be there. When it gets to 50% level, if it's going to return, it's going to give you another candlestick formation there. You can add another trade there and still put your stop loss below the A. It can do, you see, from 38.6 to 86. The market can come all the way down to 86 before it eventually go to 161. You get to 127 or 1.18. So if the market comes to any of this red, naturally the market should move to the red, 161.8. If it comes to the blue, it will move to the blue, 1.27 or 1.7%. And if it comes to 86, it will naturally move to 1.18%. So this is how you know where to enter the market and where to exit the market. As traders, 61.8 is regarded as, people call it the golden Fibonacci level. People call it golden level. Okay. Why? Number one, because it's the most accurate of all the levels. Okay. But as a trader, you will prefer the market to come to 86 There's another level close here, 78.6. Okay, it's either it comes to 78.6 or it comes to 86. If it comes to 78.6, the market will extend to one. Okay, let me show you on my own because I formatted my own, so I have more levels on my own than what you see there. So if you come to my own, I've made some formatting here. All right. So if you look at my own, I've done the formatting in such a way that I can see both to the up and to the downside, right? It's basically the same thing, no difference. So don't be confused. There's no magic inside. So this is the 100 level, this is the 0 level. Okay. Now we are saying on the upside, look at the upside. Let me put it here. Okay, yeah. So on the upside, if the market gets to this point, the market will start to retrace. Now, when it's retracing, these are the levels it's going to encounter. You're going to encounter the 14% level, the 23.6% level, the 38.2, 50, 61.8, 78.6, 86, and then 100 is the final, right? So any of this level, the market sees a candlestick formation, the market will reverse and move to the corresponding extension level. And I say for 38.2, 50, and 61.8, the market will extend to 161.8 level. For 78.6, it will extend to 141.4 level. It will for 86, it will expand to 118 level. Okay. For 76, it will extend to 127 127.2 level. Okay. Now everything you see to the up, I also have it to the down for the bearish side. Okay, so this is coming out of the fact that I did something like this. You came here, and then I format these two. You know, I can format these two. I can impute values here. I can change these values. Okay, so these values, if you see the values here, they may not make sense, but these are the values that are giving you this result that you are seeing now. And if you put anything contrary, it will not work. Okay, so you see, I did it to the upside all the way to 561.8 level, and to the downside, 561.8 level. Everything I have to the up, I have it to the down. So a good example is this. So I can come here, pick these two, and put it here. So this is my A. Okay, let me put a horizontal line to make it easy. Make it easy. So just pick a horizontal line here. I put horizontal line and say this is my A, and then I say this is my B. So when I put this on this line and bring this one here as my B, I'll start looking at this level. Are you seeing where the market goes back now? So if I look at where the market goes back, I'll just zoom it out, then move the. So this is what I've done. Look at it. So you see, the market now comes back. When the market gets to 60, look at it. The market gets to what? Look at this point. It gets to the 68, 61.8 level, right? This is A, this is B. Market is pulling back, gets to 61.8 level. And what did we find? Boom, a bearish candlestick formation. This is a bearish engulfing candlestick formation. From this point, we say sell the market here, put your stop loss above the A here, put your take profit at 161.8 here. Now, when we are doing all this market has not made all this candle. Now, look at it. Did the market get there or not? Did the market get there? So if you want to go by risk and ratio, if you come here from where you enter, move it to the stop loss, that is 53 pips. Now, what is the profit? So here, the profit is 137 pips. That is more like a risk-reward ratio of 1 is to 2.5. 1 to 2.5% ratio. That's that. So you are making 2.5 2 times and half what you are risking. That's what is given to us. So this is the way the professionals they analyze the market. And that's why they can enter the market, close their computer, go to sleep, travel around the world, and by the time they come back, there's profit in their account. Okay? Is it clear? Is it making sense? I need response, please.
Yes.
Or is it going to advance?
Yes,
It
it
is. It's
is.
fine, man.
Yes, sir.
Okay. So yeah, so I mean, we'll start as children, then at some point we'll start growing to adults. So yes, so I know a lot of people struggle with understanding this Fibonacci concept. Okay, a lot of people normally struggle with it. But trust me, once you understand it, it's a game changer in the market. It's a game changer. There are other numerous ways to enter the market. Or you see Fibonacci is one of the most, if not the most accurate in the whole world, is Fibonacci.
So far, it's good, but at this stage, it's a bit complicated for me.
Okay. Okay, very good. So that's fine. Don't worry. You will get understand it. Sometimes it takes your looking at it over and over again to understand.
Practice.
And also the book I shared with you already on the WhatsApp group, if you're on the WhatsApp group, that book has everything. So you can
Okay.
also use that as a refresher, to remind you of certain things. Then now there's two
Okay.
things. Let me also explain one concept too here. I've not done trend line, but I'll just explain it based on what we are seeing here. So if you have identified here as your A and here as your B, and then the market is going to C, remember, as the market is going to C, the market is moving back to the A area, right? This is the A area. The market starts from B and start going back to the A area. Now, when the market is going back to the A area, one thing you want to do is to put a trend line. Put a trend line across the lows. These are the lows. Low, low, low. Draw a trend line. One thing that will tell you that the market has changed direction to start selling, to realize this Fibonacci level, is when the market comes and break this trend line. Do you see that? So the market has done A, has done B, has done C, and then the market has given me what? A candlestick formation. After the candlestick formation, there are two things I want the market to do for me. I want the market to show me that it has broken a counter trend line. Then I also want the market to show me on stochastic that the market is leaving the sell zone. Okay? The market is leaving the sell zone. So there's a zone where the market will sell from, which is, I'll just add it. This class is not for today, but let me just add it. Stochastic. I just put stochastic in. So you put stochastic here. Okay. So this stochastic is an indicator. Let me change the setting. So I'm going to use 937. All right, beautiful. Then we'll now scroll back to where we have where did I have that trend line now? Yeah, okay, beautiful. Yes, this area, fantastic. So you see that you use 937, or you use 933, or you use 1133, or you use 1433. Any of them is okay. Any of them is okay. Okay. The 3 just tells you that it's faster. Okay. So now, can you see on this stochastic, this 80, let me zoom it out a little bit. You see this line? This is the 80 line. This line, anytime the market gets to this place, it's telling you that the market is overbought. Anytime the market gets to this place below the 20, it tells you the market is oversold. So in this case, our case, yeah, this is our A, this is our B. The market, during our A, you see that the market got to the overbought level, telling you the market is selling. So this is overbought, oversold, which is this area, and then it comes back to overbought. Now, because the market has entered the overbought region, and then the market comes and break the trend line, this is an indication that the market is going to sell. Okay, so three things. Okay, three things are: one, the market creates a bearish candlestick formation, which is this one, bearish engulf in this case. The market breaks a counter trend line, and then the market is coming from the sell zone, from the overbought zone. Okay, these three conditions will make you to take this trade and put your take profit at the 161.8 level, because it's coming from the 61.8 retracement level. So this is how it is measured. Okay, so when you do that, you can now go and rest and wait for the market to see the market. It started from here, came down, went up, came down, went up, came down. Your plan is not this coming down. Your plan is for the market to reach here. Do you understand? For the market to get to this place. That's your plan. And the market eventually came there and then, limit you into your profits. So that's the way it works. Okay. All right. So let's jump back to the slide very fast. So simply put, the market this guy did this all with colors. And if you go to trading view, those of you that use this trading view, if you activate Fibonacci on trading view, you can select color. You can color it the way you want. Okay, the way you want it to appear. You can make it like this. You can remove level, you can add level. All this level I'm telling you now that this calculation brought in trading view is already there. In MetaTrader 4 is already there. You only just to select it and add it, then use it. Okay. All right. So when the market retraces to red, it retraces to green, it goes back to green. Retraces to blue, it goes to blue. Retraces to red, it goes to red. So this is how the market works. Okay. So if you look at it on a real market, this is your A, this is your B, and then the market pulls back into the red zone. Now, when the market is extending, it will extend to the extension that corresponds to the red zone, which is 161.8. That's the way it works. Okay, so for each of them, you just see a sample of what happened on each of them. All right, so there's a phenomenon in the market. As the market moves down, it moves in the same numerical sequence as an uptrend, but in the opposite direction. So then we do exactly the same thing that we've done. Roland, you want to say something?
Yeah.
Right.
How do you know where to place the Fibonacci, the A to B? How do I know that in a market, for instance?
So for you to know where to place the Fibonacci, so I just did something now on this example. Let me first you understand that better by the time we take trend line, but let me just explain to you. So usually most people, this is the mistake that most people make. Most people, their chart is always like this. Most people, this is the way their chart is. At this level of zoom, you are not seeing the entire picture of the market. If you zoom your market like this, you are not seeing the entire picture of the market. So it is advisable to zoom your market to compress the chart to the smallest. If you compress the chart to the smallest, you will see the minimum and you will see the maximum. So remember, this is the front of the chart. If you stand here, if you stand at the front of the chart, I told you in our previous class on support and resistance that any support you cannot see with your eyes while standing in front of the market is not critical to analysis. Okay? Anyone you can see standing in front of the market is critical to your analysis. So as I'm standing here like this, say this is my line of sight. From my line of sight, I can see all these sharp edges. See all these sharp edges, they are all resistances, right? Like even though this is a resistance, this one is already blocking it. So I'm not saying this. If I'm going to analyze this market, I can say from here, this is a resistance, this is a resistance, this is a resistance, okay? This is a resistance, this is a resistance. Anyone that the market is blocking, I'm not going to count it. Okay, so these resistances that I'm marking now, these are the resistances that you will connect. Do you understand? So mark this one. And finally, yeah, right now, these are the resistances that we can see right now in this market as we are standing here. In the same way, we'll do the same thing for support. So when I start connecting these resistances together, okay, I'm going to see my trend. So your Fibonacci starts from the very beginning, the first point. So if I'm talking of this up now, the market came down from this up. First point is here. This is the high, right? This is the high. So this high, this is my A. Now, one will say after this A, this market came and created this as B, but you can see that the market went back to the same level. This is triple top. This is, so let me do it this way. 1, 2, 3. This is a triple top. That is 3 times the market has come to this same place 3 times. Now, what I consider, or what you should consider as your, when you see the market has made a move from point A to point B, is when the market moves and break the last support before the high. So before this high here, unfortunately, this is not a physical class, so you cannot see my gestures, right? Maybe my gesture would have made you to understand some points more. Okay. But now, for this high, there is a low, and is this low. When the market breaks this low, when the market comes from this point and breaks this low, the next high that the market will create, that is what you categorize as your B. Okay. But now, it is not all Bs that are valid. It is not all highs and all lows that are valid. So in this case, even though I see this as the last high, low before this point, I would prefer to take this one because this is a stronger low. This is a stronger low compared to this one. So when the market breaks this low, any low it forms for me is my B. So I'll say this is my A. After the market breaks this low, I'll say this is my B. Then the market now start pulling back. So from the top, you draw Fibonacci from A to B. Okay? You draw from point A to point B. So from the top here, I will draw Fibonacci from here, A, to here, B. Here, B. So this is my B. Why from the down, look at the down right now. So if you look at this down, even though the market has done A, B, C, D, A, B, C, D, the market has not taken out a key high. Look at this high, this place here. The market has not broken above it. If the market breaks above this place, I will see all the movement from here to the place where the market gives me a high as my A to B. Then I will not be looking for the market to coming back to C. But I can consider right now, what we are doing right now, I can consider here as A, right? I can consider this bottom as A, and then the market moves to B, then the market now retraces to C. When the market is retracing to C, I can come and put my Fibonacci by picking points A to B. Okay. Now this will be a lot clearer once you have done trend lines, because trend lines will show you. It's better for you to let me see. I have trend line. This is 9:46. Oh, this time is too short. This time is too short. What can we do about this time? You can see that 2 hours is too short to take the class. Okay, because I wanted to actually show you something about trend line Let me see if
It's
I
too
can
short.
just, yes, let me see if I can just open the slide. I want to, there are rules. There are rules for drawing. Let me see if I can I just want to do a quick, because it's a short presentation. It's not a very long presentation. Okay. So let me leave all this. I just want to take you to how to draw it. So this is how we draw trend lines. Okay, if we want to draw trend lines, we'll consider the A, B, C, and D. Okay, so what we'll consider is the A and the C. So first, so there are three types of trend line. We have the inner trend line, the outer trend line, and the long-term trend line. So if you are drawing the trend line, we draw it across the lows of support, connecting the A's and the C's. Remember our ABCD? Do you remember our ABCD? A, B, C, D. Now, our trend line is a connection between the A and the C. So in this case, from here, this is my A, B, C. So I join A to C. This is my A, B, C. I join A to C. Just like that. All this. So now, all the lows will connect them together. All the highs will connect them together in downtrend. Okay, so for this case, we'll pick, now I want to show you how to draw it. So this is how we'll draw it. Let me take you, but okay, so let me see if I can explain it to you from here. So for us to draw the uptrend line across the low support, yes, the long-term trend line is drawn after compressing the chart. So we'll compress the chart to the smallest, like we have right here. Like we have right here now. We've compressed the chart to the smallest. After compressing the chart to the smallest, yes, Roller, go ahead, just go ahead. Can you see that? So this is the chart compressed. Now, after compressing the chart to the smaller, this is my low. Okay, this is my low, the lowest point. And then the market goes up, came back, then I created another low. So this is another low right here. Agreed? Now I say for you to draw this trend line, what you will do, first of all, compress the chart. Second thing, you pick the trend line. This is the trend line, pick it. Then you pick the point A, you stretch the trend line out. Then you start moving the trend line back into the chart. The first place where it touches a wick, you stop. That is your long-term trend line. So look at it. I pick here, I move it, it touches this wick, I stop. That's my long term. Okay. Then my outer trend line is from where I stop, I pick that point, stretches it out, I start moving it into the chart, moving it. The first place it touches a wick again, bam, I stop. Right here. Okay. So now I have drawn this trend line down already. And the market has already gone up and the market is coming down. When the market comes back to this trend line here, I expect a reaction. Two things can happen. You see that the trend line will bounce that market back. Okay. Or the market will break the trend line. And if the market break the trend line, it will move to the next trend line. Okay, so let's go to the presentation, to the trend line presentation. Where is it? Right there. So if we come to the trend line presentation back, we'll see that. Look at it. Let me show you how we demonstrated it on the chart. So let's do it. First, compress your chart and find a trend reversal where the market has broken a downtrend line and is now making higher highs and higher lows. That's the first condition. This first condition is this. Number one, you see the market, this is a downtrend line, and then the market wants to start to go up. Now the market is now making, the market has broken. That's what I'm trying to explain to you, that when the market breaks the resistance or the support or the high or the low. So the market has broken the downtrend line. Once the market breaks the downtrend line, it means that the market is attempting to change direction. Okay. So now the market has broken the downtrend line and it has started making higher highs, higher lows. Now, for you to draw the trend line, look at it. The lowest point is the starting point. You pick it, okay? You go there, you pick the lowest point, right? When you pick the lowest point, this is what you do. You pick it and stretch it out. So the inner trend line is drawn starting with the, oh, sorry, I think the first compress your chart and find the trend reversal where the market has broken that trend line and now making a higher highs and higher lows. The next step is an inner trend line is drawn starting with the previous low above the outer trend line, moving it towards forward until the line hits the next low and or connecting the most recent A and C. Okay, that was what I demonstrated to you just now. Okay, so when I pick this one, I stretch it out, I move it towards the chart, it touches it, I stop. I pick this one, I stretch it out, I move it towards the chart, it touches it, I stop. Okay, I pick another one, stretch it out, I move it on the top. So you can do that over and over again. Okay, now, but now, when the market breaks a trend line, so it's two things the trend line does, is that the trend line will either bounce the market or make the market gets to its location faster. So they tend to show you market speed, how fast the market is moving. Okay, so it makes the market gets to a location faster, or the market breaks the trend line. And when the market breaks the trend line, anytime the market breaks a trend line, trust me, the market will gravitate to the next trend line. Okay, so in this case, let's go back to our main picture. Yeah, if the market breaks this inner trend line, the market will move to the outer trend line. If the market breaks the outer trend line, the market will move to the long-term trend line. And usually, every trend line break creates a reversal in the market. Majorly creates a reversal in the market. Okay, so is this one clear now? This explanation of trend line, is it clear, so that I can go back to that explanation I'm doing on the chart? If it's clear, I think that's it, not too much. Just starting point. So you pick your line. I'm just trying to demonstrate it. You push, you stretch it until it touches the chart. You see, you stretch it out, pull it towards the chart. As you're pulling it, the first touch, you stop. Okay. Then in the same vein, pick this point, pull it towards the chart. As you're pulling it, the first point that it touches the chart is stop. So that's how we draw the trend line. Capiche? Very short, right? Is that clear? Does it make sense?
Excellent.
Okay, so once you have that knowledge, you can now come to the chart and replicate what we just discussed. So that's example. That's what I've done here. Okay, I've picked this bottom. Okay, I move it until it touches this guy. Okay, so let me do it again. Okay, let me just delete it and let me draw it with, now that it's moving. So let me take it again. Pick the lowest point here, stretch it out, move it until it touches here, right? Here. So now the next thing you do is pick this, stretch it out until it touches here. This is what tells you. Now, and you see, at the time we drew this trend line, this market has not reached here, right? And now you are seeing that this market is now right on top of this trend line, telling you that there's a possibility that this market can bounce from here. And I already have a trade there, waiting to go up by the time the market open. Okay, so this trade that you are seeing that is negative 9,000, it can end up with more than 200 or 300,000 naira if this market goes in. Let me see if I can drag this. Okay, it will not work, but I want you to look to your left. Look to your left. Look to the end of this line. Look at the end of this line that I'm moving up and down. You will see a value there. As I'm moving, you see the value is changing. When I move it to where I say this is my take profit, you see, because market is closed, so it's not going to work. But let me just move it and hold it. Look at that line. Are you seeing you are seeing 36,827 naira. That is the profit for one of this position. One. and I have 5. 5 times 36,463. That will give you the total profit I will make for this guy. Okay. In the same vein, if you come to Euro 50, you can do the same thing and drag it and say, let's say this is your first take profit. This is your second take profit. Now that's about 64,423. That value multiplied by 5. So if these two markets, these two trades goes the way I want them to go, you see, I can even make more than 400,000 naira in less than 5 or 10 hours. You see that? So that's the way it works. It's not rocket science. And I also need you to understand that it's possible. It's possible that this market can open and then the market come all the way down, takes out this level, come all the way to this place, take this out, and it put me in a bigger loss. Now I've already set my stop loss. Let me see my stop loss here. So my stop loss, each of them is 45,791 multiplied by 5. That's what I'm risking for this trade. So if this trade does not go in my favor, I have the option of saying, oh, this market is not going in my favor. Okay, I'm losing. Presently, this is 18,000. 18,000 times 5. Maybe it's about 100,000 naira. I say, okay, close my trade, and I lose 100,000 naira. Do you understand? Instead of me to wait for it to come and get to this 45, where I will lose so much, I can decide to close it halfway and say, no, this trade is not going according to my analysis any longer. That's why you need to understand what to call multiple time frame analysis. Multi-time frame analysis. That is, you are not just making the decision because 1 hour is doing this. You are making the decision because 1 hour is taking a clue from 4 hours, it's taking a clue from daily, it's taking a clue from weekly, and it's taking a clue from monthly. Once you're able to do that, you will have higher guarantee that this trade will go in your direction. Like in this case, I'm taking this trade because it's coming from a monthly previous resistance level that becomes a support. That's why I took this trade. And that's why I have the confidence that it will favor me. Okay. So that's basically the way you go about, using trend line to analyze this market and also applying your Fibonacci. So let's just finish our Fibonacci slide. I think we've done the main part. Okay, so just a case of applying them. When the market creates A to B and you are looking for C, and C is coming from the red level, it extends to the red level. Okay, so if you look at the market very well, in an uptrend, if the market is going up, you see that this retracement level, they are support. Why, if the market is going down, this retracement level, they are resistances. Okay, so let's go back to yeah. So the market is going up. This retracement level, they are what? They are support. But the market is going down. This level, they become what? Resistances. Okay, so look at it. So as the market dips, creating down ABC, the prices swing as 3 ED natural levels, which are this. So the first level is the 86, second one is the 78.6, and then we have the 61.8, 38.2, and the 50 that makes the third one. And in the same vein, when they start extending, they extend to their corresponding what support, which is the 161.8, the 1.186, and then the 127.2. So these are the key levels in the market. So if you apply this very well, you understand it. So just a recap. I said if you're standing in front of the market and you are looking to the market to your left, you will find what we call eye of resistances, and it creates what we call like a staircase. And then we talked about this already in our former class, where we show how we identify the eye of resistance, the resistance, and then also We talk of support, that when you stand in front of the market and you are seeing the lows of resistance, if you join them together, it forms like a staircase where you are descending. Okay. So this is how we identify the low of support. I'm sure a lot of you already know this. And I said any resistance or support that is not in the line of sight is not useful in your analysis. All right, so this brings us to the end of this course for today. Wow. Any question, please? You can unmute yourself and speak now. Any question if you're not clear?
Yes, I'm Prince. I want to speak.
All right, go ahead.
Yeah, this so far this analysis can we also use the phone to do some of these things on the MT4?
Okay, so let me put my phone on the screen for you to see. Phone. That's good. That's good. So I want to just show you the difference between the phone and the computer. That's 1 minute. Let's wait for it to connect. Refresh, connected. Okay, let's see that. Good. Permission granted. All right, so that's my phone. Confirm you can see my phone. Can you see my phone? Can you see my phone screen?
Yeah.
Okay. All right. So this is MetaTrader 4, MetaTrader 5 on the phone. If I click on it, this is how it appears. Right? Okay, so let's see. So this is the trade that we are looking at right now on the computer. So this is the chart. This is what the chart look like. Now there are still some few tools you can use on the phone, but trust me, it's very difficult to use it to do analysis. Very difficult. Okay. You are limited to what you can do. So all these tools, if you come here, this one will show you your currency pair. So if I click on AUD it changes to AUD Okay, these are currency pairs. Then if you right click, you see your time frame. So I can change the time frame to H4, to M30, to any time frame that I want, 1 month, any time frame. Okay, then your indicator, this F, you click on this F, you see indicators. So this is main chart. So if you click on this plus, you can select indicators you can add to your chart. So if I say, for instance, I want to add moving average like I did the other time, exponential 20. Okay, so I type 20 there. Okay, and I say apply. Okay, I say done. It will draw a moving average. It will draw, so you see that there's one moving average here now. So if I go back to the chart, okay, you will see the moving average there. You see that it has drawn a line for me. Let's take it to AUD USD. Let's switch the time frame to say 4 hours. So you can see the line. You can come here again, say click on this F and say another moving average. You come here, say add another moving average. I say this time I want to add 10. Okay, so we change the line to 10, and then we say change the color to say red or something. Okay, and then we say done. Okay, now you have two lines on the chart now, the blue and the red. So in reality, you can actually use it to do a little bit of analysis, but not very. It's not all the things I'm showing you on my computer now. You will not have them here. You will not have them here. okay, is limited. Then also the MT5, if I come here, okay, and I say go to MT5 right here, it's MT5, okay. So if you look at this MT5, it's a little bit different from MT4 in the sense that MT5, you can have a pull down of all your, currency pair, whatever you want to trade. You can have all of them pulled down here, okay. So, and you can see your trade, your current trade, you can see your history, you can see your chart, and then you can see your quote. And on this quote, you can come here and say, okay, I want to add, see for it, I want to add this, volatilities. Anyone I click, it will disappear from here and it will go to the chart. So let's go. I click volatility 10 is off, bam, 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 bam. Everything has gone to the chart. So if I go back and go to the chart, if I click on this currency pairs here now, you see all those things I added, look at them here. Initially, when I showed this thing, it stopped at 50. But now I have all these other ones. These are the ones I just added now. I can still go back there. I can still come back here, quote, and say add. And I select any, maybe I want to add energy. I want to add anything. So let's say I want to add step indices. You click on step, it's added. You click on energies. You click on crude. Click on this, click on this, click on. All these that I had, they are now back to instrument that I can pick from and I will trade. I can come here, pick this. So you can see all those crude and everything I just added. And so if I click on Brent now, the chart will change to that of Brent. So let's say we are going to 4 hour or daily. I prefer daily maybe. Okay. So this is the chart. This is crude oil chart. Okay. So there's really, really limitation. I don't advise anybody that is, you're really serious, you want to trade Forex, and you say, because some person come to the radio and tell you can do it with your phone, you can do it with that. Now, yes, you can do with your phone if you don't have to analyze. Okay. Let's say, because now for me, I've gone past the level where I have to do so many analysis, right? I can just look at the chart and say, oh, this market is going to buy or sell. Not too much analysis with my phone. So most time, what I do with my phone is to monitor my trade. So when I come here, when I've taken my trade right here, when I go to my phone, I start monitor this trade. So this trade that you are seeing that is running here now, I'm showing you minus 9,000. If I come to my phone here, okay, and switch to MetaTrader 4, okay, so this is your trade, you see that is the same, you can see the same thing, minus 9,000 there, okay, and then if you have multiple accounts, like for instance, I have now, the same time I'm trading here, this is Naira account. I also have one account here. If I click on manage account, you can switch to any account. This one is USD account. So if I click on this USD account and say sign in, okay. Now, once you sign in, once the amount of that account shows here, like now you see it's showing me that this account has balance of, I started this account with $500 and I've moved it to $599, okay, in just like 2 days. Now, this is the trade. The same trade that I have on the other side, running here with minus $16. Okay. So you can see my balance is 599. My equity is 582. You see that? Okay, so now this is basically for me. Maybe I'm at work or I'm somewhere, I'm not in my computer. I use this to look at the trade. And as I'm looking at this, let's say I look at this trade and I feel that what is making is good for me to take home. I will just come and close. I can come here, right click on it and click on close, and that currency pair will close. So mainly your phone should be used for monitoring. If you ask me, use to monitor your trade. For your analysis, you have to do your analysis using your computer. Okay. I don't know if that makes sense.
Yeah, it's fine. Thank you.
Any other question, anybody?
Yeah, good evening. Mr.
Yes.
Patrick.
Good
Thank
evening.
you so much for the great lectures. I don't really have a question. What I just need is, I don't know how I can get your past lectures. So I can, because actually I did not start this from the beginning. So I can just key into it by looking at those previous ones.
Okay, so for the past lectures, I'm trying to put them on, sorry, I'm trying to put them on YouTube.
YouTube.
Because the size are big, so I've succeeded in doing it. Yes, this is my channel. Yeah. Okay, YouTube. I think I've uploaded 2 videos there, and you guys can just go there and pick it from there. You can download it from there. I'm going to upload the rest ones. I see I want to upload. As my channel, yeah. Okay, so this is it. So this was the last class. It's already there. Okay, I think it's around 300 MB, so I couldn't send it. So I've come here. So you can just take this name, type it on your Google, you see it. You can actually watch any of the videos. I'm going to upload at the end of the class. I will upload this one. I will upload there's one other one that I've not uploaded. I will upload it. The first class. Then the very first class, I didn't record that one. So maybe when I finish this series and I'm doing the next series, I will record it so that I can upload that video as well. So if you just take the name ZipatFX, just go to YouTube channel. Let me see if I can give you the link. I can just drop the link here for you. It's here, Forex video, ZipatFX. Okay, so I can pick it from here. Yeah, so I'll just drop it on the message box. So if you click on that link, it should take you there direct. All right, so I'll drop it there. So if you go there, I'm going to be doing some more videos because you see, like all this, I intend to do a lot of short videos to explain some key concepts. And I've also shared with you some very good sites. These are the sites, they are here. I've shared with you Wise Trade. I've shared with you traders channel, the trading channel. Okay, all these sites, they are very good sites for you to learn, most especially Wise Trade. You see, I put Wise Trade as #1 because their content is wonderful. You know, they are very logical and they are very good. I've also paid for their course. I've taken their course, so I have access to their videos and their materials. They are the guys that have, let me see if I can, let's see if I have that listing here. Download. So if I come to download here on videos, my videos, I see Wise Trade. These are Wise Trades. Okay, so yeah. Okay, so you see this class? I paid for it. I took the class, got all the videos, and if you come here, these are the documents. These documents, they are not free. I paid for it. You see? You can see this is their candlestick patterns, you know. Okay, yeah. And some of these you can see them on YouTube. Okay. So beyond the free videos that you will see, they also have some premium video that you will take in their classes. And this is one of them. This is just for Wise Trade. I've done for Trading Channel, I've done for Western Sahara channel. I've done a lot of training. They are paid, they are not free. Trading Channel, I paid $1,000 for their training. $1,000. I paid. Okay, so when it comes to Forex, the knowledge quest is not, in fact, it has no end. Okay, the knowledge quest has no end, basically. So we try to consolidate on it all the time. So, and every time I paid for those training, of course, there's always something new, that I learn. Okay, but of all of them, the best is this guy, MTI. This is the game changer in the market. Is a very big school. It's a very big school, and it's in the US. And this materials you see me using today, I got it from the training videos that they use to train me. So those are the videos that I converted to the slide that I'm using, at the moment. But this is their website. So if you want to go, you can go pricing and see some of the price of their products, Yeah, so you can see their product there. Traders package. These ones are like elite club. Okay. So if you want to know more, just the website is there, markettraders.com. Go there, browse it. You see they have some free materials that you can just download for free. Then they also have premium material that you have to pay to get. Okay. So that can also help your trading. So let's see how far we go. I think we can stop here for tonight. By next class, we go to the uptrend and the downtrend, and how we can use Fibonacci, how we can apply Fibonacci, to trading and taking profit. All right. Any other question? Anybody from anybody?
Thank you very much. Appreciate it.
Thank you.
Thank you, sir.
Thank you, so much. I appreciate once again.
All right.
Prof, thank you.
Thank you very much.
Thank you, sir.
Okay, so let's try and make use of the knowledge. The joy that I will have tomorrow is that somebody from this class has traded and is earning a living from trading. I've done it before and I'm still doing it. I can tell you that I can run my family without having to even work, by just trading. Okay, so the work that we do is just because of the passion for the work, But if in terms of the knowledge of the trading and making money from the market, trust me, it works. And I've used it and it's working. And you too can do it. So my joy would be that after this class, somebody is trading and that person is making profit, and somebody's asking you, how did you do this? Say, oh, it was Patrick that, that taught me how to do it. And like I said to some of my friends today in my former school group, I said the knowledge to make wealth, they are not teaching it to us in school. If not, I will not read engineering for 4 years and come out and carry a file and be looking for a job. That tells you that the real thing that brings the money is not being taught. And let's be realistic, by the time we start getting jobs and working, we undergo even more tedious training in order to deliver. If we can get all those from school, we would have gotten them one time. You understand? We would have gotten all of that from school and we won't have to bother ourselves. But the truth is, you won't get them in the school. Imagine somebody that has done a 5 years, 4 years program in the school, and the person came to learn Forex for 1 week and is making so much money. But they spent 4 years, NYSC, making it 5 years in school. But that knowledge alone, he cannot just come on the street and start making money with it. Even if he's recruited in the bank, he will need to undergo another training. If he's recruited in the oil and gas, he will need to undergo another training. So I said to them, guys, see, this thing I'm doing it for free. Yes, some people may not really, place premium on it, but trust me, it can alter somebody's future, and it can alter your trading results. So let's take it seriously as many people, it's unfortunate that for us, we have to go through this, this whole learning curve, to be able to be successful. If I know what I know today when I was in school, maybe I wouldn't have even finished that school. And now I realize why the likes of Bill Gates, the likes of Facebook, they will tell you that they are school dropouts. This is one of the reasons, because the school, that same school they drop out from, is giving them honorary PhD degrees today. They are even calling them just to make sure that they bear a degree in the name of the school because of their status in society. Why? Knowledge. Knowledge. There are a lot of people that have, trade in history that have broken records, trading records. Go to Google and check. There are plenty of them there. They made marks. Those marks is not because of the school they went to. It's because of the knowledge, the Forex knowledge they acquired and applied. So I urge each and every one of you, we are just starting now. It's looking like a child's play. By the time I get to say 100 or 150 people on that group, I might not need to be sharing this thing on Facebook. I will just post it on the group because it's also stressful, having to share this information from time to time, try to get people, is a little bit also stressful. So once I have a group and I have like 100 to 150 people in that group, they can do the sharing, I'm only just to come and deliver the lecture. All right. So thank you so much for your time and believing in me and attending this class. Don't worry. It may look daunting at the first time. Before you know it, you will become a pro and you'll be trading this market and talking the way I'm talking right now. When I trained a friend of mine. He lives in the US. He's my classmate in school. When he saw my post on Facebook, he called me and he said, "This thing you are doing, is it real?" I said, "Yes." He said he wants to learn. I said, "It's $1,000. He paid. I trained him. After the third class, just like we have done, the guy grew his real account. He grew it. He paid me $1,000. That $1,000 he paid me then was 400,000 naira. So he actually sent me the naira equivalent, and I organized that class for him online. Do you know the third day, this guy grew his account from $13,000 to $45,000 real account. It was the wife that called me and said, "Hey, what have you shown to my husband? Because I'm not comfortable with it." I said, "What is it?" He said, "How can somebody make that kind of money, in that short interval?" I said, "But the person can also lose that kind of money as well." She said, "That's the reason why she's calling me, that she caution the husband." One day I was in Port Harcourt, I was in Nest. This guy called me. He placed a withdrawal of $100,000 one day. So if you think that we are just doing this in like child's play, trust me, he's able to do that because why? He has a lot of fund, that he put in the trade, and also he's taking a higher lot. Like this lot that you see me taking here, this 0.15, this could be 15. Imagine if this is 15. When that market was 48,000 naira, imagine what it would have been. It would have been in millions of naira. If this is 15, 15, 15, 15, 15, that's about 75 lots. I cannot do 15 lots on a 1 million naira account. This is a little bit less than $1,000. But if you have a $50,000 account, for instance, you can make even 5 million naira in a day, provided you put your trade in the right direction. So it is important that we know this, have it at the back of our mind, and also extend it to most especially the young one. My target is the young ones, the youth. Because if I have the youth, being able to do this on their own and they are making money and they are self-sustaining, they will shun a lot of vices on the street. Trust me. There are plenty of things that they will not do. Okay? So let's spread the message and get more people to be aware. And like I said, I do this thing for $1,000. If somebody comes and says I should train him alone personally, I don't take less than $1,000 and I don't negotiate it. Some persons in this group know. I don't negotiate it. You understand? Imagine the energy, the time, the resources that you put in. But because I say, let me give back to society, that's why I'm doing this thing for free. And I hope that people will take advantage of it. Okay. All right. Thank you so much. Let's call it a day. Our next class will be same time next Sunday. God bless you all.
Patrick, sorry. Some of us are just joining for the first time. So how do we catch up from the beginning scratch?
Oh, first timers. What we can do? So this is like a generic class, right? So maybe
Yeah.
what we can do, as we progress, we'll kind of sectionalize it. All right, but
Okay.
that because my schedule is very tight. That's why you see that I'm just doing just Sunday. I cannot do that sectionalizing on a Sunday. So what I can do is to have and I need somebody to manage that for me. So if somebody can manage it for me, where I will have a class that is only new people, and I'll say this class is going to run for say 2 weeks. After 2 weeks, a new class will start. I need to do something like that, because if I want to start going back to satisfy everybody, then we will not progress.
No progress, yes.
Progress. So I think, don't worry, I'll work on a plan and see how I can manage the new people, that are joining. But what you can do, once you have access to my YouTube channel, you can just go there and watch the videos. I'll try and update them.
Just send me the link so that
It's on
I
the.
can
I've
work.
already dropped it on the chat. I've dropped it on the
Okay,
chat.
okay. I got it. Okay.
Then also, for some persons that send their numbers to add on the WhatsApp group, I think I have. Let me see the people I couldn't add.
My number is. I just add my number now.
Just 1 minute. Let's see. I think it's this one. But there are some people that their number is not on WhatsApp. Okay, so yeah, I know I did something like this. So if you are showing red, it means that I could not add your number. Red, Olu. Let me see the first person. That one is Samsung. There's no name. So I don't really know that person, but I couldn't add the number. Olu, I couldn't add you. If you are here, Duke, I couldn't add you. Then who again? Okay. Then there are some persons that they set a request for you to send them a link. Once I do that, I send them the link. I think I have like 2 persons or 3 persons that join through the link. Okay. So, yeah, okay, yeah, it's fine. I will see what I can do to those ones that I couldn't add. I'll get to you personally and let's see how we can resolve it. Then for the new people that are dropping, don't worry, I will add you to the group. All right, thank you. Okay, let's call it a 9. God bless you all. Thank you. Bye.
Thank you.
Thank you. Good night.
Good night.
Good
Yeah,
night
night,
and thank
Mhm.
And stop recording. Okay, I need to do this to stop recording. Stop.